Hello and welcome. Today we're working on a video on how to calculate the Bitcoin return and risk for the year 2024. Now, once you do this, you can do it for any time period. So let's get started. If you're new, my name's Jeff from Finally Learn. I do a lot of instructional videos on financial literacy, using Excel, how to build Excel models where you can solve a lot of financial problems. So here I've just set up a basic chart. We're going to fill in the return and the risk, and we'll show you how to do it step by step. I've got my start date, which is a year ago, December 31st, 2023, and the end, December 31st, 2024. So the way we look up Bitcoin is BTC/USD. You might not know, but Excel can do this. So if you go to you might be on the home ribbon, go to the data ribbon, and go to currencies. So it recognizes this as a currency. And we're going to say, hey, what is the price? And then also, what is the last trade time? So here I'm on January the 5th, so just a couple of days after December 31st. So right now, here is the stock price, not the stock price, but the Bitcoin price of 98,233. All right, so what we can do is we can pull the stock history. We can pull the stock history on this, and so it'll give us the price. This function is stock history, which pulls stock prices, but it also can pull Bitcoin prices. So stock history, and then we want to point to the stock, and that's Bitcoin. I'm going to do a comma, and then the start date is 12/31. The end date is going to be 12/31/23. The first date is in 23, the last date is in 24. And then what do we want here? We want daily, so I'm going to put 0 here. I want this one. This is kind of in the way here, so let me move it. So I want to show the instrument identifier and header, so I'm going to do that. I'm going to hit a comma, and it's going to say, what do you want? I want the date, and I want the close. I don't need any of these other things, so I'm just going to close with the parentheses. And it should pull the daily prices for Bitcoin in between those two dates. So it's going to pull the date, December 31st, 23, and then every date that there's a close in 24. Bitcoin essentially transacts and sells, buys and sells 24 hours a day. So we essentially have 365 trading days. It may be slightly less. In fact, let's look. We can see, looks like it's 356 days we have the close. For some reason, we don't have all 365 days, but that's not a problem. We got 356 trading days. So here's what we want to do. We want to calculate, we've got the date and we've got the close. Let me clean this up just slightly. And so then we're going to have the daily return. So what is the return? And then what is the growth if we invested maybe $1,000 or so? In fact, I'm going to put $1,000 and we can see what it grows to. Well, our return is going to be the 43,000 divided by the 42.5. We have a little return minus the 1 because we want just the rate of return, the increase or decrease. So we get something like 2.6279. So a little bit more than 2.5% return. And then I can copy this all the way down. I can go to the right bottom corner and double click. A left click there on the mouse, and you'll see every day the return. Some days it's positive, some days it's negative. All right, so we also can calculate the growth. So if we started with 1,000, we'll take 1,000 times 1 plus the 2%. So if we had a $1,000 investment and it grew at 2.6%, we'd end up with $1,026. So here's what we have. And we can do the same thing all the way down. I'm going to double click, send it all the way down, and that copies that formula 356 times or whatever the number is. So that 1,000 would grow to 2,204. All right, so that's more than doubled. So that means our return is more than 100% for just 1 year, which is fantastic. All right, so let's do this. Let's do the risk first, and then we'll work our way back up. So what is our daily standard deviation? So this right here, what is the daily standard deviation of our returns? So I'm going to start with standard deviation, and since we have all the returns for the year, I'm going to do standard deviation of the population. And all I have to do is take all the numbers and highlight those. And so that's my formula. So for 356 days, or whatever the number of days are, that's our standard deviation for the daily returns. So the variance on this is just going to be squared. So the variance is 2.7% to the second power, right? That's squared. So our daily variance is 0.07%. And we have how many trading days? Well, I want to do a count on the number of returns I have. So that would give me my trading days. So count this many days, and that many days are 356 trading days. So to get the annual variance, I'm going to take the 7% times the 356. So that gives us 26% is the variance, but typically what we do is we calculate the annual standard deviation. So standard deviation is our measure of risk, how volatile our returns are. And so what we're going to do is we're going to take the square root of the variance, and that gives us standard deviation. So our standard deviation is about 51%. But what is our return? Our return is going to be, I'm going to use the RRI function. The RRI function is the rate of return. The number of periods is going to be 1. So 1 year, so we're going to annualize it. The present value is going to be 1,000, and the future value, it grew to this number here. So what is our rate of return? Our rate of return is 120%. So in 2024, Bitcoin had 120% return. So your 1,000 would grow another 1,000 plus another 20%. So it grew to 2,200. So this shows growing from 1,000 to 2,200 is 120% rate of return. But it's a risky rate of return because the annual standard deviation is 51%. Now, how did that compare with the entire market? The entire market for 10 years, the compounded annual growth rate is about 76% for Bitcoin, and the standard deviation is about 76% for the last 10 years. So in 2024, we had a return that was higher than the average 10 years, and our risk a little bit less than the average standard deviation for the last 10 years. Hey, thanks for watching. We'll see you on the next video.